Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 20th of May, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the 4th week of May. And as we look across the two inversely correlated pairs, spot gold has driven lower, weakened down to almost hit the 1950 support level before bouncing back up to close at the 1975 area. And inversely correlated with the dollar yen, which continued its bullish momentum right through the 138 round figure, and but on Friday it pulled back into the 138 area. With comments from the Fed Chair Powell. So let's see whether the momentums will continue, a bearish one for spot gold and a bullish one for dollar yen, as well as the US dollar index, which we'll take a look at later on as well. But let's review the highlights from last week and then what the possible fundamental news that's coming up for this coming week as well. Well, last week was the only key news was the US retail sales, and which came out lower than expected, 0.4 versus 0.8% forecasted. But this still gave a boost to the US dollar and drove the majors lower. Perhaps it was mainly due to a positive figure compared to the last 2 months, 2 rounds, where it was negative. So it turned out that since it's positive, even though it's lower than expected, it was still a better than expected figure for the overall economy. So that perhaps gave a boost to the US dollar. And then on the UK job side, there was concern with higher than expected claims and also a higher rate. So that did not augur well for the UK economy. And the Eurozone and German ZEW figures was also lower. Confidence is lower there as well. Then on Thursday, the jobs figures for Australia was not good as well, with less jobs added, in fact, negative jobs added, and a higher unemployment rate. So that did not help the Australian economy outlook. And the surprise news on the Friday was the scheduled conference and the speech from Fed Chair Powell, where we were still talking about the Fed's target of 2% inflation. And although considering some of the banking issues recently, then there could be a balance with the possible pause. But at the moment, the inflation is still high, so there could be one more round of rate hike this next round in June before a possible pause. So we'll see. That's so the market took it better than expected as all the major pairs recovered on the Friday against the US dollar, with this possible hint of a pause after the next, perhaps one more rate hike in June, and then a pause for, we'll see whether it's one or two more meetings. So that was the only recovery made on Friday for the majors. This coming week is all about PMIs on Tuesday. All the major economies will be announcing their flash manufacturing and services PMIs. And the key one is on Friday with the US price index figure that the Fed is watching. In between, there's also the CPI figure for UK, which has been running high from about 9 to 10%. So this time the forecast is for only 8.2%. So we'll see whether it's able to dip lower. And there's also an outlook for the preliminary GDP for US. So let's see the key news again on the Friday. A lot of Friday news these past few weeks. We've followed by durable goods orders as well. Okay, so let's move on to the majors and the analysis. Let's begin with spot gold. Where after hitting the 2000 support for the two rounds prior, if we take a look at the 4-hour time frame, it's even clearer. With multiple support from the 2000 until a couple of weeks ago, it tested it once towards the end of May, to the end of the first week of May. And then the previous week, second round, before finally giving up. And the third time, it punched through the 2000 level and fell all the way back down to 1975. And as in first interim support, and fell again, almost hitting the 1950 support on the Thursday before finally climbing it back up. And this was the news at the time of Fed Chair Powell's speech, where it made the recovery with along with all the major pairs, where they may consider pausing, but could be one more round of rate hike for next month. But due to the banking stress, there could be a pause after that, as it seems to be reaching a turning point. And we'll see from this coming Friday's PCE price index, whether the preferred inflation gauge for the Fed has any slowdown. And this was the break of the 2000 and the trend line on the Tuesday, after failing to climb up higher above the 21 fib. Fell through, and that was the first interim support at the 38 fib for 1975, and did not reach the 50 fib. It managed to find support just slightly above the 1950. I think it hit the low of just at 1952. Yeah, just below 1952 before managing to recover on the Friday. So let's see whether it's able to continue its recovery. It needs to break back above the 2000 level to make a decisive recovery. If not, it could just consolidate. If it does break down lower through the 50 fib, it could just test the 50 fib as well. Just test it one time and then consolidate. But if it does punch through it, then there's a significant support below that as well. So that's at the this swing high area and this swing low zone at around 1934-35 area. This swing high should be 1937 here. So around the 1935 area. But if it does weaken further, it's have to test the 62 fib at the 1913 area. So that's quite a ways away. But depending on what the US news for PMIs and the price index, the inflation index. All right, so let's see if there's any correlation with the US dollar index, the DXY. And here's the DXY. And indeed, it does look like an inverse correlation still with the euro. After a pullback in the start of the week, it managed to pull back and find support right at where it broke out from this upper trend line of this ascending triangle. And on the Tuesday, that was the US retail sales figure. That's where it bounced from, and initially dipping lower and recovered all the way back up past the 103 resistance zone, and was actually heading towards the daily 200 EMA. But then on Friday, with the comments from Fed Chair Powell, it pulled back lower, back below the 103. So at least there's some follow through in the breakout, and we'll see whether there's enough momentum to carry it further down or up to the 62 fib, just like the euro. And taking a look on the weekly time frame, and it's blocked by the weekly 55 EMA, and still bullish spinning top, so there could be continuation move further. So this breakout from this support level now, that's confirmed as a key support now. Let's mark this as support. And likely resistance zone up at the 62 fib, along with the daily 200 EMA. Okay. Right, there could be some pullback at the start of the week before a continuation move up to try to test the 62, whether it's able to reach there. If it does push through higher, there's another resistance level, probably from a swing low. Let's check that. So it does try to climb up higher. It's all the way back multi-year from 2016, and there was a swing high tested twice before. And let's extend this further out. And that's at the 103.75 area. Yeah, that's only if it's able to break through the 62 fib retracement. All right, let's move back to the other majors. Before moving to the dollar against Japanese yen, let's also take a quick look on the weekly time frame for spot gold. And it was a low wick here formed on Friday and managed to bounce back up. So there could be some remnants of a bullish momentum to try to test the 2000 level. Otherwise, it's just going to consolidate within this range with the lower wick. It's at 1950 and perhaps at the 1950 to 1990 range. All right, let's move on to dollar yen. Continued to rally after the push up at the end of the previous week and drove higher through the 138 level. That's the key resistance. And before closing on Friday, right at the 138 again. So it's manages a nice recovery here. We'll see whether it's able to hold on and consolidate slightly before climbing back up. And it's going to try to target the 140 level. So the next key resistance at 140. This level here is still a critical area. We take a look on the, let's look for the left here. That's the resistance levels where it tested twice before, and now it managed to break through. So if this is going to continue, it needs to consolidate and then climb up higher and either try to break through 140 and target the 138 fib extension. On a weekly time frame, it's a very bullish close here, and there's definitely enough momentum to drive it, to try to drive it to the 140. If we take a smaller range fib reversal here, let's see where that will set the 139.40 area before it tries to break the 140. Then the next one will be at 162 fib at 140.41. So let's see how much further it has to go. Or it may not get to 140. It could just hit 139.40. Can move the support now up to 135. The 62 fib is and there's also another potential interim support at this 62 fib. There's a confluence here with the shorter fib as well. Let's mark this as an intermediate support. See if this holds. If it holds, and that's also critical support. Okay. All right. So we'll see whether the there's further continuation moves for both the dollar pairs and the major pairs, and with the some key US news coming up as well. There will be some exposure from them. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.